engineer, but he's also a businessman. With respect to finance professionals, finance is a part of business that supports businesses in kind of the same way. It's like we support businesses by crunching numbers to a large extent and understanding how their businesses work from a numerical perspective. And that's really what a lot of the jobs within finance encompass. It's just supporting businesses and supporting companies that make products that people want through use of numbers.
Thank you.
Yeah,
That
and I
was
would also add just in terms of general career path, right? Obviously, all the people who are on this panel are focused on the investing side, which means you're deploying money to invest to support a business or acquiring a business. And there's a whole field that just sit outside of that. So she was mentioning corporate finance is the finance function within businesses. And then you also have investment banking, and that is much more of an advisory where you're advising companies to make financial decisions. So we won't have time to cover all of them, but those are just some examples.
thank you for both of your guys' input. Now let's go on to the next question. So I'll target you, Mr. Eric Zhang. So what is the best way to start a career in finance?
Best way to um, do investment banking. Or better yet, like Lily, go straight into investing. That's kind of the fast, right? I mean, there were many ways. I was just joking, but the most popular way is to spend a year or two on Wall Street. I mean, we're better to learn the alchemy of finance than Wall Street, right? So, given the opportunity, think about that. Or you can start, people start in accounting. Some people start in consulting as well, or a corporate finance job. There are many ways to get there. And the finance world is broad. So think about it when you're a freshman or a sophomore in college, when you have the resources to learn what those jobs actually are, and to talk to your upperclassmen who have done that, and you will have a better idea. But those are the most common ways.
Yeah, I would say just given a lot of people here in high school, as you think about college and we're studying, you don't have to study the more traditional finance disciplines, right? Like those are, things like corporate finance, economics, accounting. You could be more broad as well, but I would say a lot of us here, for example, she and I both went to the Wharton School, which focused on business, and then, Eric, I think you did econ as well, right?
I did econ, yeah, econ and math. We didn't have a business program at Northwestern, unfortunately. Turned out okay though.
Yeah, you ended up being fine.
All right, thank you for both of your guys' answers. And one last question, I'll target you, Mrs. Lily Huang. So how can students land finance internships?
Yeah, it's a good question. Obviously, once you go into your undergrad school, everyone is going to have a little bit of a different experience depending on your school. So, for example, she and I went to a school that was very specifically focused on business. And if you look at Wharton, it was very focused around getting students into jobs in investment banking. Well, there were other jobs too, but that was quite a big plurality of the students. And really, I think the biggest thing is just about networking and talking to people and understanding exactly kind of like this situation too, which is exactly what you're going to be doing. Because as an internship, especially if you're an intern in banking, it's an apprenticeship job, which means that you are spending the time to actually do some of the work as what we call an analyst do, which is, financial modeling, understanding these meetings, and how do you sit in these meetings and absorb the decisions that are being made. And so getting there is tough, but a lot of the networking and skill set building with the people who are already in the job is going to be the most important in getting the job. I don't know if she or Eric, you guys have anything to add.
I'll add one thought, which is that for parts of the investing world, specifically what I do, which is just picking stocks to a large extent, that's accessible to you now. You can read about it, you can learn about it. That's honestly the best way to get into the business and to understand what it is that you'll be doing is just doing it now. It's like the same thing with if you're going to go off and become a programmer, that's pretty accessible to you right now. So I would recommend if you're interested, just start learning about it. And there's a decent amount of resources out there. I can send along some after the call to help you get started, but there's a lot out there that you can start with now.
All right, thank you. Yeah, I think your resources would really help us and the participants out. So now I think we'll move on to our next section with Franny and Yoshida asking the questions, and we'll put the spotlight on you two.
Yeah, so hi guys. I'm Yoshida and I'm a junior at high school. Fernie, do you want to introduce yourself?
Yeah, hi, I'm Franny, and I'm also a junior in high school.
Yeah, so just moving on to the question section. For this section, we're gonna talk mainly about hedge funds. And we'll focus on Mr. Song, though of course, Mrs. Huang and Mr. Zhang, please feel free to add your input. So just kind of starting off broad, could you tell us a little bit about what investment firms are and how they kind of relate to the finance sector?
Sorry, it's been like 5 years and I still don't know when to go mute. So investing, I think big picture, like how investing works, since we haven't really talked about that. The investing world, big picture, businesses need a few things to exist. There's the product, there's the customers, there's the employees, and there's a capital. Think about a Starbucks store. To exist, you need a product first, which is the coffee that people go there for, their experience. They need employees working there. They need you, the customer, to actually go and buy the coffee. They need to pay for the equipment and for the store, and that's where the capital comes in. They need some money up front to run that thing. So the Starbucks store can then turn this capital into more money, and that's essentially what investors do. Is they look for opportunities where money turns into more money, and that's all we spend our time looking for. That's where investment firms step in. Investment firms build relationships between two sides of the world. There's people who have money to invest. Those are generally people who are a little bit older, further along in their careers. People with 401ks, your parents have money to invest, and people who have ideas and need money to put that idea into action. The purest form of this is what Lily does. Maybe she'll step in with venture capital, which is early stage companies. Once you get it later into what I do, which is public market investing, stock picking, it starts to become a lot more abstract, whereas like Starbucks doesn't need our money. So what exactly is it? But the essence of it is that you're looking for a business that can turn money into more money, and those are the companies you want to buy and own over a long period of time. So, sorry, I think I got a little bit off track with the question, but did that cover it?
No, that was a perfect explanation. Thank you so much.
Yeah, I think you asked about where hedge funds fit into the investing world. So on the public market side, hedge funds are defined by being public market investors, like we pick stocks. And the interesting thing about picking stocks is that it's very easy to do. They're not private companies. You don't have to go out and find companies to invest in. You don't need entrepreneurs. You can just go and buy a stock tomorrow. And that's what really makes hedge funds stand out and be different than everything else, is that ease of transaction. And that means that the only value that hedge funds can add, then put differently, like the only thing that gives us an advantage in the world is understanding the future a little bit better than everyone else. And that's just a really weird thing to do. But that's the essence of what a hedge fund is we try to find stocks that will go up based on a superior understanding of what the world will look like, either next quarter or over the next decade.
Yeah, that was a really good explanation. Thank you.
I have our second question for this section, if that's okay. What type of people would you say succeed as hedge fund investors?
If you've ever watched Kramer, that's kind of what hedge fund folks are actually doing on a day-to-day basis, but that's not really the type of person who succeeds in a hedge fund role or in a public market investing role.
The exact opposite.
Yeah. So it's hedge fund analysts are researchers at the end of the day. Like I mentioned, all we try to do is try to understand the trajectory of a business a little bit better than someone else, which is trying to understand businesses, industries, and which companies will succeed given everything else that we know. So for instance, I specialize exclusively in software. I focus on a handful of software companies, and that's all I spend my time studying. So it's folks who like that type of depth. I'll give you an example. if I were researching Microsoft, I would talk to customers, former employees, competitors. I would try to get data on some of their products, whether maybe buy data on website visits, things like that. The goal is just to figure out what Microsoft's revenue and earnings look like over time from next quarter to next 5 years and just build an understanding of that. That's a research job. So if you ever, I'm sure you spend a lot of time in the library by yourself studying. That's what this is. You're not really part of a team. You have to be extremely curious about what you're doing. You have to have a really strong work ethic, but you're by yourself for the most part. And that actually defines the type of person that's easiest to say doesn't fit well into this job, which is someone who's very team oriented, who likes being part of a broader company or a part of a group of people who aren't solo or independent by nature. And those type of people, I think, generally prefer other roles. Obviously, nothing wrong with that. Like those are the people who make the world go around. But the analogy here is that a hedge fund investor, a public market investor, like think of a sports team. A sports team has a bunch of people playing on the team. The hedge fund investor is the guy betting on the game from the sidelines. That's really what this is.
Yeah, I think those are some really great metaphors, and I mean, I really understood it very thoroughly. And also just one thing I wanted to add, it's really clear like that you all are very passionate about it just from the way you're explaining it. So that's great to see. And then just to kind of go a little bit deeper into hedge funds, could you tell us a little bit about how quant funds specifically differ from these hedge funds?
A quant fund, there's shades of gray is the first thing. A quant fund, when you think of a quant fund, you're generally thinking of a group of programmers or mathematicians in a room, and then their computers essentially are making all of the decisions. And there's shades of gray on that spectrum. Like I actually fall somewhere in between where computers are doing a large part of the analysis for me, and I have to write code as part of my job. But that's not something that, it's not computers making the decisions at the end of the day. So a quant fund is like at that one extreme where it's just a model that's making all of the buy and sell decisions at the end of the day. For the other extreme, which is your very traditional investing roles, it's people just making calls on which companies they think are good at the end of the day. And then they use very little data. They just talk to customers, talk to employees, and try to figure out, is this actually a good company or not? Do I want to invest in it? So that's the other extreme, but there's shades of gray in between. I would say like when you think of quant funds, the type of people who succeed there are those with very advanced technical skills. A friend of ours who's also a Troy High grad from a year below us, Mason, he works at a quant fund and he's a programmer and mathematician by training. And those are the type of people who excel there. They do really well for themselves.
I see. So they're kind of opposites, people people with similar characteristics are the ones that succeed at both of them.
Yeah, I think they're similar in a lot of ways, but they are very different skill sets. Like one, you have to have a very technical skill set of being able to program, do math, understand modeling. And then on the other extreme, like fundamental investors, I consider myself fundamentally a fundamental investor, which is very qualitative, that's the research job I was talking about, which is just I read a lot. That's the core of the job. And I talk to a lot of people to try to understand how the world evolves. But very little of it involves complex math. It's like I ask people, are you optimistic about Microsoft over the next 5 years? And give me a few reasons why. And then try to take a lot of those views and then sort them all out myself.
I see. I don't know, there were so many like different groups just under the broad title of investing. So that's really cool to see.
Yeah, and Lily and Eric do completely different or completely different angles of it. This is just public markets.
What advice would you give to someone who's maybe like a high schooler or a college student who wanted to get a job with hedge funds?
The traditional path and the one that I went down as well is exactly what Eric was talking about, which is you go to a decent school, you go to an investment banking program. Both of us were at Goldman. I did a flavor of an investment banking program, and then you join a public market firm or private equity firm, and then you move into public market investing. Usually, public market investing is where that train ends. So that's what a lot of people in public markets do. I think it's possible. I don't know what it looks like today. I don't know how people are recruiting for public market jobs today. There's generally fewer and fewer of them, so it's harder and harder. The way, like I go back to what I said before, which is there's a lot of ways to succeed in the industry and a lot of ways to get into the industry. But I think the best one and the one that will teach you quickest if you actually like this job or not is just to start doing it. Like Kramer, don't follow his advice, but watch Kramer. See if you're interested in what he cares about and what he sees. Read about companies, try to understand what they do, try to understand whether they'll succeed or fail at a deep level, and start with your parents' industries. I always find that's a good place to start. And then there's a lot that you can teach yourself about investing very early on and about picking stocks. And then that will teach you if you actually like this, and it'll help you get a job in this industry.
And one thing I would suggest, if y'all here have time to do, is read books too on investing. I probably started too late, which is maybe why I'm not a great investor, or maybe not a great public market investor. But they were both just awesome. Warren Buffett, I mean, his letters, and there were great folks who started hedge funds, founders of SPO and a couple other firms. We can put together a reading list as well, but go read, and it's really fun to get to know how those folks think about the stock market, think about public market investing. That's something I would definitely recommend that you do if you're interested.
Yeah, and kind of just a follow-up question to that, do you have a specific like age range at which you'd recommend people start investing? And then kind of alongside that, I know you mentioned like studying and reading books. Do you have any like maybe top 3 books that you'd recommend people who want to invest start reading?
I'm curious, Chi, Lily, what do you think? Top 3.
It has to be the letters of Warren Buffett. It has to be. He's the best at describing how business works. He's the best at describing what it is.
Yeah.
Yeah, that's number 1, 2, and 3.
One, 2, and 3.
And I
So
feel
very
like
good letters. So that for sure. I would put Competition Demystified by Greenwald. I think he is a Columbia professor. Is that right?
Yeah.
But that's a very good book. And the story is about how big companies compete and how they think about competition is the core to value investing. That teaches you what is a good company, what is a good business. Very interesting.
Yeah. And on the age part, I mean, as whenever you can start, it's never, if you can't open a Robinhood account, open one with your parents and start.
Yeah, I see. I mean, those sound like some wonderful books. I will definitely be sure to check them out, and I'm sure our participants here will too. And then kind of our final question for this section, could you tell us a little bit about the impact of trading algorithms and quants on these normal hedge funds?
In general, I think, sorry, go ahead.
No, it's all you.
In general, I think the quants do a better job than most fundamental investors. If you're going to pick one thing to do in public market investing, be a quant. Like quants understand fundamental investing as well as we do, but they also have a totally different skill set, which is very important. So again, I think a lot of roads in the modern economy for white collar work comes back to coding and programming, and this is another example of that. So the long story short is it's having from an industry perspective, the more quantitative capital gets managed and the better they do, the worse most fundamental investors look by comparison. And that's the reality of what's happening in the industry. Like I mentioned, public market investing from a fundamental standpoint is not a high growth industry. I'm not sure if it's shrinking, but it definitely feels like it's shrinking. And that's not an industry you generally want to be in. Like I would struggle to advise students like yourself to actually go into this industry. It's a great job. That's the best I can say about it. It's a great job if you have a temperament that the one I discussed, but it's not an industry that's easy to get into. It's not an industry that has staying power in my view.
Yeah, and I think I would add there when it comes to hedge funds and public investing, just to understand, right? You are investing with information that's public to everyone, and you're investing amongst millions of retail. And retail, when I say retail, I mean like a person like me and you, as well as institutional with these types of hedge funds who are spending hours doing the research and trying to find a differentiated view. And you have to be right. And for the most part, for you to make money, you have to be right in a way when everybody else is wrong. And so it's great for people. I'm not saying, Chi, you're like that, but it's great for people who essentially are looking for that edge and feels like in some ways you are potentially smarter than everyone else. And when you get it right, and it can be extremely rewarding financially, but it is very hard to get it right. And it's increasingly hard to get it right now with a lot of these quant and information availability.
I see. No, that makes a lot of sense. And I think like I agree with you, like for beginning investors, it might be better to start with something else. But I think that that wraps up all the questions we have for this section. And I will hand it off to Arush to ask a few questions about private equity.
Hello, everyone. I am Arush. I'm a junior in high school, Rochester Adams High School, and I have a couple questions on private equity for Mr. Zhang. And just a note, so if anyone who joined the seminar, if you have any extra questions, feel free to add it in chat. At the end of the meeting, if we have time, we will go through those questions, okay? So, Mr. Zhang, what is private equity and how does one earn a career in it?
Sure. First of all, Eric. You can call me by Eric, my first name. It feels a little weird to be called Mr. Zhang.
Okay.
What is private equity? The easiest way to think about it is, unlike clicking a button and then buying stock, you're buying other type of stuff that cannot be bought by clicking a button. That's probably the easiest way to think about, private equity. Unlike the public market, you're investing privately. So your friend has a business they want to sell, or a company wants to borrow money privately that they cannot be funded through the public markets. So that's very broad, and there are different flavors in it, right? The way people talk about private equity talks about a specific kind of private investing, which is buying mostly mature companies, borrowing some money to fund that, and putting a little bit of your own money to achieve a financial result. So the best example is like buying a house, right? Think about that as the bread and butter of private equity investing, which is there's a house, there's some value. You borrow money from the bank. That is your leverage. That's the industry speak. And then you put down your down payment, right? That's the equity that we put in as investors in private equity, right? And the way you make money is, look, the house, maybe you rent it out, right? So there's cash being generated during this period of time. Hopefully the market is robust, and a couple of years down the road, the house is worth more money. You pay back the bank charges some interest, but hopefully your value, the accretion there is much higher than the interest that they charge. And then boom, all that gain becomes your return on the equity you put in initially. So that is essentially the business model, very similar to investing in a real estate in a house. Did you have a second part of that question? I forgot. But
oh no, that analogy made a lot of sense. So
okay.
Just another question is, how do you find businesses like these private businesses that are not in the public market, like stock market? How do you find those businesses to invest in?
Yeah, there were different ways. Usually there were like middleman market participants that do these kind of intermediary jobs, which actually is a big chunk of what investment banks do, right? So bankers are kind of like real estate agents. They help people buy and sell houses, businesses here, in our case, in private equity. So there's a market, even though it's not public, there is a private market. But the better way to make deals work is actually you going out there and build a personal relationship with the founder or the management team who are looking to sell the business. So, think about what Chi just said about public investing, right? The time you spend is you're a researcher. You're learning about businesses. You're doing research, reading materials. My job, and a lot, oftentimes Lily's job too, require us to be out there on the road meeting people, because that's the way you get to know them personally, you gain their trust, and you assess them, right? Because a lot of what we do is people investing. We bet on the right management team, on people you trust, and meeting them in person and assessing their qualities, their personalities, and what matter most to them are a big part of our job. So, so to sum it up, the answer to your question, some of those transactions happen with investment bankers. A lot others happen just based on the personal relationship.
Yeah, that makes a lot of sense. So would you say that I guess connections you make in college is important, right?
Yes, it is. Yes.
Yeah. Okay, so another question is, can someone enter private equity right out of college?
Lily, you want to take that one?
Potentially, potentially. So investment banking is a this is the largest funnel into private equity. I would say when going into investing right after college may or may not be the right decision, because when you're investing, think about the decisions that you make. If you decide to buy a company, you now have to live with that decision. You deployed money into that company, and that level of responsibility is pretty significant. And so the reason why investment banking is a great training ground is because, like Eric said, the investment bankers spend a lot of time advising companies around whether or not they should take money, who they should take money from, and then help broker the buyer, which is the private equity firm, with the company itself. And so you're able to learn during investment banking a lot of these types of skill sets and listen to a lot of these conversations and be a good training ground. Jumping in after college into investing can sometimes be tough because you don't have any work experience. And so if you're sitting in front of a management team, it's not like there's ever, as an associate or an analyst, it's not like there's a requirement for you to be in these meetings and be doing deals. But certainly in some ways, it'd be great if you actually had more of a work experience to come in. But it is possible. So if we think about the private equity world, it's really dependent on the private equity firm and whether or not they hire people straight from college. And so back then, TPG, which was the firm that Eric and I worked at, it's one of the largest private equity firms in the world. They did hire a few people from right out of undergrad. They actually decided subsequently to stop hiring people from undergrad. I don't know, maybe it was me, maybe it wasn't. But certain other firms, Blackstone, which is one of the, I think it might be the largest private equity firm now, they have always historically hired from undergrad. Silver Lake is another one that's a big tech one. I think they used to hire as well. And so, as you can tell, it's a very, very few number of firms, and therefore just a really competitive space to be in. And you'll always have an opportunity to go there after investment banking, which is why my answer to this is always like, what's the rush, right?
Yep, thank you for your response. Okay, so now moving into more specific questions. How has the higher interest rates and the current economic situation impacted private equity?
Good question. I get asked that question every other day. It's funny because like the textbook answer, what you will learn at, say, Wharton in your corporate finance class, is that it should not matter. It should not matter. And they have a theory about it. It's what, Monically Miller or whatever. But it matters a lot, actually. The simple reason is just, think about buying a house again. And that's a great analogy. The interest rate is higher, meaning what? Meaning you have to pay a higher monthly mortgage payment, right? Which then means if you're making the same amount of money you're making, you just can't afford too expensive a house. You have to adjust your budget. So likewise, in our industry, now people, instead of paying, let's say $100 for a business, now they can only pay 80 to get to the same return. Now, what does that mean for the industry? That means sellers are less willing to sell because market clearing prices are lower. And then the quality of the deals are lower, because if you can wait a couple more years, and who knows where the interest rate goes, right? But if you can wait, why do you sell now, right? So the impact of all that is, deal volume is slower for sure in 23. I think going into 24, people start to realize, well, interest rate is not going anywhere near zero, or not even as zero, near zero, right? Anytime soon. So life goes on. 4 or 5% treasury yield is the new normal now. So we'll see what happens in 24.
Yeah, and I would say also interest rate has a negative impact on the company itself too, even after the private equity firm invested, because these are high leverage investments, which means that the investor and the company is putting a lot of debt on the companies, and if the interest rate goes up, that's interest cash that the company has to pay every single year. And a lot of these companies, their EBITDA goes up, it can go down, and if you're paying out a lot of interest, it can have pretty significant impact on the stress of the company as they think about ongoing operations.
Okay, that makes a lot of sense. Thank you all for your inputs. And thank you for all sharing all your knowledge. So now we're going to
Actually, can I ask you, what are you seeing on the public front?
For interest rates, you mean?
Yeah.
Higher rates just means lower stock prices, and then we'll see one way or another.
That's good news for you guys, no?
It is. I mean, I think for the folks on the panel, or for the folks on the call, the interesting thing about interest rates is it shifts value from people who are going to be earning more money over the life of their career and away from people who have already earned their money and are now just saving it and investing it. So that's the balance point for interest rates in the economy. The way it works is that, let's say that you spent your past 20 years and now you built up $500,000. You spent past 20 years working, you built up $500,000 of savings. Higher interest rates means that the value of your investments today goes down, but the value of your labor in the future goes up. Because now if you earn, I don't know, if you save $10,000 over the coming year, that $10,000 becomes more valuable over time because the rates on it are higher. Instead of getting 0% on it, you now get 5% in a bank account, or maybe you get better than that in the stock market. So it makes more sense to work. And that's why higher interest rates pull more people into the job force, into the labor force, and it helps balance the economy that way. So higher rates are good news for all of you. Lower rates are good news for people who are late in their careers and who've already built up a lot of savings and just want to see their wealth go up. My cat just knocked something off the table. I'll leave it at that.
Thank you for sharing your knowledge. Now we're going to move on to venture capitalism, and Matt will be asking the questions.
So, hello everyone. Whoops. Yeah. So, my name is Matt Zhang, and I'll be doing venture capitalism. So, Lily Huang, as a quick brief, what is venture capitalism?
Yeah, so venture capital, if you look at the spectrum of investing, where you have the late stage companies that are public already, like a Microsoft in hedge funds, and then you have in the middle for private equity, where companies are bigger, they're making profit. Venture capital is on the very, very early end of that, which means you're making a very high risk bet on a company that could be just getting started, that only may have a couple employees, and you're giving that founder or that CEO money to be able to go and start the company. And so from a risk and reward perspective, it is very different than any of the other industries that we talked about, because here you're making a bet with very, very high risk, but you're expecting very, very high reward. So one of the most famous ones, if you think about Facebook, which Mark Zuckerberg started when he was in college, is, that company, they were putting in a dollar that was most likely going to be a zero, but the return on that dollar has been pretty significant given Facebook now has $1 trillion market cap.
Oh, yeah. Facebook is an excellent question, but you mentioned how it's very risky, high risk, high return. What percent would you say succeed? What percent would you say fails?
It really depends on the stage that you invest in. So venture capital will cover anything from what we call a seed. So that is the first round of capital that the company ever takes. And these usually is just two people with an idea and they decide to go. That's probably like a 99% failure or 1%. But it can also go from what we call Series A, B, C, D, when the company actually has more revenue. It could have 1 million, it could have 10 million. And that significantly goes down. And I would say if you look at a venture capital firm, and I come from NEA, which is one of the largest venture capital firm, we invest across different stages, and on a blended basis, it's usually about 20% of our investments drive 80% of the returns. And from a loss perspective, it's probably around, my guess is, sub 10%, full 100% loss. But, even in that case, right, it's really the top 5 companies that return essentially an outsized amount that allow you to return the fund.
Wow. I I can see that. So it seems that there's the risk and returns there are incredibly high. And
Mm-hmm.
yeah, it seems to be a very, very risky and requires an extremely large amount of experience. So to acquire these experience, what colleges would you recommend to attend in order to best improve your skill set for this type of job?
Yeah, well, I think for all these careers that we're talking about, it is pretty competitive to get in. And for a lot of the attention that's on hedge funds and private equity and venture capital, it's really a small percentage of the total dollar allocation if you look at things like 401k and where those dollars are being allocated. And so if you always want to have the best opportunity to get into these, and so for a lot of these funds that are very well known, they have target schools. And so the target schools are the usual suspects. They're the Ivy League firms, they're Ivy League. They're also, the real, you guys are from Michigan, University of Michigan is definitely a target school as well. But, you just want to go to as best school as you can with the best program.
Yeah, that is certainly true. This might come off a bit weird, but as it seems, since these are super new companies, they tend to have like huge risk, huge returns. What are specific key characteristics or for like a new company that was likely to succeed, or key skills that you investors are looking for in an entrepreneur or founder that will signify that this startup is very likely to succeed or very likely to rise up above all others?
Yeah, well, the ability to tell that is essentially what makes or breaks all of our jobs. But I would say on the earlier stage side, it's just a lot more person dependent because there is nothing else to evaluate. So unlike a public company, I don't have all the information because it's just an idea. The only thing I can evaluate is the person who's coming up with this idea. I will say when it comes to an entrepreneur, there are definitely qualities that make an entrepreneur easy to work with. For example, things like ability to pivot and change and be flexible, industry knowledge, or even having done this before. A disproportionate of venture capital firms are backing entrepreneurs that have already succeeded in the past. And it is a correlation right now that second time, third time repeating entrepreneurs are more likely to be successful. But really, part of my job, if you look at it on a day to day, is just seeing as many companies as possible and developing a pattern recognition around what is going to be successful in the future. And these conversations and the feel, and also just your understanding as a venture capitalist of the industry that you're investing behind, all of them play a part in trying to figure out if the company is going to be successful.
I see. Yeah, it seems that that mostly that you guys are looking mostly for the entrepreneur themselves. Now Andrew will be taking over and be asking questions for the panelists themselves.
Yeah, these are some more personal questions, but my first one is like, can you outline like what you did to get to your current like state or status, and like could you outline some hardships that people may have to go through if they want to be like successful like you guys?
Lily, you want to lead us out?
Yeah, sure. So the question is
Nice cold
around.
calling, too. Love it.
So the question is,
I want to hear this.
how did we get here and what are the hard parts? And you heard a bit about how we got here, right? There's certainly a path. For example, I knew I wanted to do business and I knew I wanted to focus on healthcare. You don't have to know that right now, by the way, as a high school student, but I ended up studying at a business school. Getting here, like I said, a lot of relationship building, a lot of networking, and also a lot of studying and working really hard to get good grades, because when it comes to these types of getting internships, you are dropping your resume. You are probably amongst hundreds of people, students, peers in your school, and you have to be the one who stands out and get hired. In terms of hardships, I mean, well, I'm sure we can talk about it, but these jobs are pretty long hours or can be pretty long hours, especially in private equity. I mean, you're working potentially up to 100 hours. I don't know if Eric is still working that a week, and you get rewarded for it. It's
Too real, too sad.
yeah, you get rewarded for it, and that you get paid very well. You learn a lot. You work with some of the smartest people that I've ever encountered in my life, but it can get pretty hard.
So, what would you say the starting pay would be for like the start of like you're right out of college, right? What
Yeah.
do you think the starting pay would be?
So, and it's been a while since all of us have been starting. So I'm sure this number has changed, but you could probably expect six-figure salaries at a Goldman or even at TPG, where between your base and your bonus, you're making over $100,000. Now, that is not too dissimilar if you went into tech and you are an engineer, but most jobs you don't start with a six-figure salary unless you're in finance or tech.
Can I inquire about like raises, bonuses? How often will those come by? How frequent are the raises? Like every 3 years, every 5 years? Like,
Wow, high school kids these days
Yeah.
are direct, Nelly.
No, I think Eric, you should take this.
Yeah, well, Andrew, the way I look at it is, look, y'all are really smart people here. The short answer is you all do fine. So I think numbers are the wrong questions almost to ask, because you really will, right? Like you all be very successful in life. The real question is, is finance what you want to do? As Lily said, it's rewarding, but it takes dedication, it takes grit, right? So think about it. You can try it out. If you don't like it, sure, there are a lot of options. But I think that really at the end of the day is the right question to ask, right? The raises, the financial trajectory, it is fast in finance. Again, short answer, right? So think about that. I mean, challenges to overcome. Maybe one thing I will mention. I noticed a lot of folks on this call are Asian Americans. I mean, we all are on this call. When you go out there and you join a bank or you join a corporate, it'll look different. You look around, it won't be like this, right? And well, maybe you will find a lot of Asian Americans in the junior ranks, but the partner ranks, at least today, not yet. And what does that mean? That means it is not easy to feel comfortable, feel at ease, feel like being yourself in the finance world or corporate world out there. And for me personally, that is a long learning process, an adjustment process. Right? I spent the first 19 years of my life growing up in China. And the culture shock for me was not day one when I was in college, because that was welcoming in a different environment. That was like a year out of my analyst program at Goldman, how to realize that things are just different, right? So I think that is something that a lot of us will be overcoming at some point, or maybe it's a continuous process in your career. But be proud of who you are, right? Be proud of your culture, and speak up. Don't let anybody like steamroll over you. No, right? Screw that, right? That is for me the most important thing, and I wanted to share with this group.
I got one comment to follow up on, which is I was briefly a defense analyst, and then it didn't work because people thought I was a Chinese spy. And then the other thing is that there's a website called levels.fyi, which does pretty good comp benchmarking focused on the tech industry. What they'll tell you is an analyst today at Goldman gets paid $162K. That's 2 years out of school. And then
Good.
for a VP, which is not a VP at most companies, but like someone 10 years out of school, that goes up to about 400K of total compensation on average.
Yeah, that's good. And on the compensation side, first of all, I think what Eric said is very true. And obviously part of this community here is for you all to get to know people who are more senior, but also your peers as well, to support each other, because it's not easy to be in finance, and having your peers is probably one of the most important things. But on the compensation side, the three careers you talked about have different ways the compensation is formed as well, because compensation is not just cash, but it's also equity and in venture we call carry, which is the equity that we have in our funds. And it's also, for people like Chi on the hedge fund side, it's also what you make just from your own personal bets in the market too. And so, for example, in venture, most of my compensation is going to come in the form of carry, which means if the fund does really, really well, I have a percentage of that, and that percentage is what is going to really make up the most of my compensation. Private equity has that too, but their companies are more later stage, so it's a little bit of different risk reward profile. And then private equity has a lot of cash comp, and then on the hedge fund side, there's a lot of performance based incentives on an annual basis, and you can make a lot or you can make nothing.
Thank you. Another personal question, what got you into finance? What started your journey? I think that's an apt way to describe it.
The thing that got me started was Chi.
Oh, that's unfortunate.
That's totally fair.
I was in high school and Chi was in college, and he came back and gave a lecture about how great it was to be a finance and don't be a doctor. So my mom's very happy about that.
It is, I think, strictly better career for a lot of people than being a doctor. When I look around, doctor, man, I'm glad I wasn't a doctor. Holy crap. You have to deal with patients. You have to anyhow, so sorry, that aside, what got me into it is that I went to Penn, and very quickly you have to figure out what you want to do at Penn, and that's one of the great things about Penn. I think I started learning how to invest very, very early in college, and by the time I graduated, I was kind of functional analyst, more or less functional. So I went directly into public market investing out of college, which is a good career choice for me. And that was my biggest advantage all along, is I just knew what I wanted to do early. And that's why I always recommend to everyone else who thinks about public markets as a career, figure it out early.
Okay.
And keep in mind that it's incredibly competitive. For whatever reason, most of the folks who I'm around who decided to go into public markets after college didn't stay in the industry. I think there's a number of reasons for that, but part of it is that it's hard and there's a lot of randomness. And it's a shrinking industry. Doesn't help.
Okay. Then now I'll pass it to Mark, who will be asking questions that were sent in the chat.
Yeah, hi. So some of our audience has sent some questions to us. So let's be starting with some general questions. Our first question is, so if you're starting out on finance and you're just completely new to the field, how do you know if it's right for you? And then when do you know to stop?
Well, it's right for you when you're having fun. Or I mean, if it's not fun all the time, at least you know why you're doing it. All right. Some people don't, and I think that's the time to stop. Or you think there were more important things in your life that you want to balance, and the job in finance is making you miss out on those things, and that's also time to stop.
And also, I would say finance is the reason why a lot of people are attracted to it is that it's broad enough with different types of roles where you can definitely find different roles that potentially fit you better. So I started in private equity and I decided to move to venture capital. And actually, I recently decided to move to corporate finance. And so I guess I'm a good example of you can make changes in the finance career. But, the reason why I really enjoy it and love it, other than just, looking at numbers, is because you get to be exposed to a lot of different people. and you get to be able to make decisions and learn a lot of different concepts at a pretty young age and be given a responsibility as well. And for me, the trade-off between the work-life balance or the lack thereof and the people that I got to work with who were incredibly smart and just the pace and the environment that I was working in, to me, it was really worth it because I felt like I learned a lot and was giving a lot of responsibility. And I really, really liked that.
Thank you. And to all of you, so when pursuing like a career field like similar to yours, not so much of what colleges do you recommend, but so what can you give us some insights on what majors people should take or students should take that are helpful to help entering these fields?
CS.
Computer science. Yeah. I mean, it's a very different world today than even when we were in school. I would say CS then wasn't as big of a focus, but I think now it is. The other thing I would say is you see a lot of different majors in the finance career. Like I work with people who were biology majors, I work with people who are art history majors. Um, when you go into these colleges, I think you'll be inundated with different career paths, and I think you should talk to people, right? And I would actually, if you were interested in business, and if I were to go and do it again, and you only have 4 years to really just study, like I would actually just do a major that I really love. Like history is an example. But if I knew I wanted to go into finance and business, I could tailor my extracurricular activities, I could tailor the clubs that I do to be able to be much more geared towards getting a job. Because you'd be surprised, a lot of these interviewers, they don't really care. They don't really care if you're an economics major. They care if you can do the job and understand the concepts. But they actually think it's pretty interesting if you did something completely different, as long as you have the basics.
You don't have a passion for accounting?
I have a passion for accounting now as a CFO.
I was an accounting major.
Wait, there was an
Accounting's-
accounting major at
Yeah.
Wharton?
Yeah, we
Yeah,
did.
Amazing.
Yeah.
Yeah.
Accounting is more useful than finance, and CS is
I
more
was gonna
useful
say
than both
like
of them.
take one accounting at least, like
Yeah.
one intro to accounting. That's one accounting, one corporate finance. Those two are gonna be very helpful.
Yeah, accounting is the language of business. Finance, I think, is just made up stuff.
So is econ, right?
Econ's made up, yeah.
And here's another question. So what is the application of programming in non-quant roles? And are there any languages such as or skills such as AI development that are useful?
I spend 10% of my time writing code. It's incredibly useful for everything. And if you're a white collar worker, if you want to be a white collar worker, as I presume everybody does, except the doctors, then yeah, you need programming. You need programming skills.
And
I don't spend time writing code, but I have someone who works for me who does write code for me.
yeah, and here's one question that's more specific for Lily. And Lily, so how do you perceive a trend of reduced deal sizes in the current venture capital market? And what are your thoughts on potential impacts of a return to pre-pandemic interest rates?
Yeah, it's a great question. As you can tell, right, just given the macro, it's not even just the interest rate, but I think in general, this idea of risk off in this type of more of a downturn type of environment has an impact, and it does trickle the early stage side. I will say I don't think reduction in deal size is necessarily a bad thing for the industry, because over the last 3-4 years, there's just been this explosion of investments and cheap money out there. And that can create actually a very irresponsible view of how you build a sustainable company, where it doesn't matter if you could ever get to profitability, as long as you can fuel your growth and keep hiring with cheap capital, you just keep go and do it. And so I think right now we're seeing a correction, and I think that actually could be very helpful for the industry. But I do think what you'll see is you'll see a lot more companies unfortunately get shut down. You'll see potentially investors leaving industries and making it harder and harder for companies to raise money. But overall, as we think about the innovation economy in the US, I'm very, very bullish on that. And I think we'll continue to build and innovate.
That's great. And then I think this is going to be your last question. So some of you have backgrounds in investing in the healthcare industry. So do you have any insights on where the healthcare companies are? And then considering that some of them are the worst performance in the S&P 500, this past year, would you say that they're undervalued?
Eric, you want to take that?
They can be at any random place across America, and the towns and cities some of us have never heard of, but mostly you'll find them in Boston, New York, Chicago, Nashville, San Francisco, and around San Diego. What's the second question? Undervalued. I don't know if it's undervalued or fair valued. They were richly valued some 2-3 years ago. Now it's probably, appropriately valued. I think it depends on the type of that you see, some of the most cutting edge companies that were having the easiest time raising money 2-3 years ago, and they're having the toughest time today, which I think those companies are probably undervalued. Because it's just reflective of the market environment, not really reflective of the technology or the potentials they have, right? So maybe there's some, undervalue there, but mostly I think today it's I don't think it's undervalued. It's appropriately valued.
Yeah. I mean, healthcare is 20% of the US GDP. So it's always going to be a space where you're going to have a lot of opportunities to build companies, invest, but it's a really hard space because you're dealing with just a lot of industry dynamics that make it difficult to start a company. For anyone who's interested in healthcare, obviously healthcare and technology are just two of the most popular sectors for people to want to spend time and work in and invest behind. And they're very, very different. And I'm sure Cheat can talk about technology, but healthcare, I think, is for people who, one, are attracted to the space and being able to help. And there's definitely a mission driven component of it, just given what we do. But it's also a space that will never go away. It'll always continue to grow.
Okay, one more question. I know this was some time ago, but Mrs. Hong, you mentioned that to get jobs in the financial sector, you need to have good grades and you also have to stand out, right? And as a high school student, if I'm trying to get into a good college, or like if I'm in college, if I'm trying to go into the financial field, like what are some ways that I could do to stand out?
Yeah, I mean, one, get relevant experiences and get unique experiences. So, for example, what you guys are doing right now, I mean, you're starting something new that's very relevant. It's a really interesting story to talk about. And then two, when I talk about networking, right, which is like really start developing relationships with people, because not only could they potentially be your mentors, but also they could help you as you navigate a lot of these different roles out there. The thing I would say about mentors is you can't just email someone and say, hey, will you be my mentor? Right? Like that's not how it goes. It's really around creating that, hey, look, demonstrating that you're passionate about something, you want to learn, and there's something specific that you really want to seek advice and get help on, but also someone who's like a great mentor makes me want to mentor you, is you also showing that you're doing the work to really understand the space.
Okay, I see.
I just want to follow up on what Lily said, but at the most senior levels of every industry, almost every industry, and finance included, it's just sales. Like it's just all technical skills are important for getting your first job. People skills are important for succeeding in every business field.
Yes, you're selling yourself and you're selling money.
Well, I want to say thank you, Lily Huang, Eric Zhang, and Chi Sung for being our panelists today. It means a lot to us. We know that you guys have a really busy schedule because you guys are so successful. And yeah, it means a lot to us that you took the time out of your day to answer our questions and just be here with us. So thank you. And I'm also
Thank
saying
you,
this
guys.
for everyone. So now we'll be moving on to our conclusion. Thank you all for coming to our first panelist event on Wise Impact Charity Fund, Demystifying Wall Street Jobs. We hope you all had a great time and gained valuable insights from the dynamic world of finance. As we conclude this event, we encourage you to carry this knowledge and inspiration you received today into your endeavors. We look forward to seeing you in our future, and we wish you the best of luck. And also, as a quick shout out to our social media, here's our Gmail shout out, and this is our website. If you guys could take a look, it will help you guys stay informed about future events. And in addition, here is our social media. We have a social media on Facebook, X or Twitter, Instagram, as well as LinkedIn. So if you guys could follow and pay attention to our social media, it'd be really helpful for us. It'll help us gain awareness for our cause. So thank you all for being here.